Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that driving the markets currently. So Peter, what's new in the markets?
Well, we had a slight move upwards of the US dollar yesterday. The move wasn't pretty wide. It wasn't so wide. It was actually a little bit low, but it was very characteristic. And it was characteristic on two accounts. The first would be that the dropping streak of the US dollar practically was ended yesterday. And we had 3 consecutive days of USD dropping. That came to a halt. At the same time, the strengthening of the USD was felt across the board almost, even just by a bit. So that would be, in my opinion, the most characteristic move in the FX market yesterday. The second issue, which was also quite interesting, was the rise of US stock markets. We have up until now around 60 companies which have released the earnings reports. That should be about a good sample to see how stocks and earnings have been moving in Q2. And it's characteristic how around 3/4 of the companies which have reported earnings have more or less topped the expectations by analysts, which is a good sign. On the other hand, we have to note that the topping may be narrower than previous quarters. That's one. The second element which would be of notice would be that the expectations have dropped anyway. So the topping may not be as surprising as it would in other occasions.
What earnings reports would you single out today?
I would definitely single out AT&T. That would be the first. I would also note Snapchat. And in my opinion, Philip Morris as well. Maybe even I would be looking at with some particular interest at the travelers companies, as practically the touristic season is about to start, has started already, but it was at the end of Q2 when it started. So I would be focusing more on these releases. There are more, definitely, okay, but I think these 4 would single out.
And how have gold prices been moving?
Gold's price dropped a bit, and that was mainly due to the strengthening of the US dollar, even the slight one. Overall, though, I would note that practically, despite some stabilization in gold's price over the past few days, with the exception of yesterday when it dropped, I would maintain a slightly bearish outlook for the precious metal, given that in the past 4 days it was not able to substantially gain ground as the US dollar weakened, while on the flip side, once the US dollar even gained just a bit, gold's price started dropping once again.
And how about energy commodities?
Well, we had the correction lower of WTI's price, which was extended during today's European session. I would also note that natural gas prices seem to be dropping today, even slightly. And on the fundamental side, I would be highlighting for energy products practically the reopening of Nord Stream Pipeline 1, which is once again starting to supply natural gas to Europe from Russia.
And what's on the calendar for the day?
Well, I would be noting in the American session the release from the US of the initial jobless claims figure on a weekly basis. Despite the figure rising slightly, and today it's expected to drop a bit, which could provide some support for the USD. But overall, the release seems to remain rather lukewarm. I be noting also the fully fed business index, that's for July, which is expected to rise from -3.3 and reach 0. That would be parallel level. And practically, that could also provide some support for the US dollar. Yet, I think the main releases, and we have a rather busy calendar tomorrow during the Asian session. When we get from Australia the preliminary manufacturing PMI figure, that's for July, should a rise be reported if compared to the final release of June. That would be implying practically a faster expansion of economic activity for Australia's manufacturing sector, which could boost the AUD. Also, I would be noting from the UK the GfK consumer sentiment. That would be also for July. An improvement is not expected here. On the flip side, it's expected to tick down deep into the negatives from -41 to -42, which would not be exactly good news for the pound. However, the release is considered to be of medium impact, so traders may pass it over. The final release, which would be interesting, would be from Japan. Definitely, we would be highlighting Japan's CPI rates. For June, the headline rate was at 2.5% year-on-year, while the core rate is expected to accelerate even a bit, which would imply that inflationary pressures are still present in the Japanese economy, and that could, if realized, provide some support for JPY. Also, a bit later, we would be highlighting from Japan the preliminary Jibun Bank manufacturing PMI figure. That would be for July. A rise from June's reading could imply practically increased economic activity for the crucial manufacturing sector of Japan. It's the main economic sector in the Japanese economy. And should that be the case, we may see JPY gaining. On the flip side, should the reading drop, we may see JPY relenting further ground.
I understand that we are to have substantial action also on the monetary front, right?
Yes, we had already a start from Japan during today's Asian session with BOJ's interest rate decision. The bank, as was widely expected, remained on hold at -0.1%. There was no actual tweak in its forward guidance, nor regarding its yield curve control implementation. So the bank is still targeting a very low yield for Japanese government bonds at 0 to 0.25%. And the bank had clearly stated that it will practically buy the necessary bonds to keep the yield at low levels. And that tended to be a continuation of the bank's ultra loose monetary policy, which could practically weigh on JPY as monetary policy differentials seem to favor other currencies, with central banks which have already started to hike rates or are about to start hiking rates. Say, for example, like the ECB today. The ECB today is expected to hike rates. The question is how wide the hike will be, whether it's going to be a 25 basis points rate hike, which ECB policymakers had repeatedly stated or implied in the past, and more or less that's the base scenario. However, due to the high inflationary pressures in the Eurozone, there are some calls also for a possible 50 basis points rate hike. Should that be the case, we may see the euro getting some support here. At the same time, I would be noting the forward guidance of the bank. The market seems to be pricing in a 50 basis points rate hike in September. And for that to happen, the bank would have to more or less also start paving the way in advance, possible with a more hawkish forward guidance. Should that be the case in the accompanying statement, and that could more or less also provide some support for the euro. Otherwise, I would also be highlighting ECB President Lagarde's press conference later on, The ECB president has proved in past press conference that she is a market mover with her statements for the euro. And we may see the volatility for euro pairs being extended practically from the time of the release of the decision as such, all through ECB President Lagarde's press conference. And should that end about 4:30 to 5 o'clock, that would be GMT +2 time. Last but not least, I would also note from Turkey CBT's interest rate decision. The bank is expected to remain on hold at 14%. Mind you that there are substantial inflationary pressures within the Turkish economy, actually very high inflationary pressures within the Turkish economy. We have a CPI rate which is at around 78% year on year. Food prices may be rising at an even faster pace. And a possible dovish stance could weaken the Turkish lira, as it would allow practically inflationary pressures to continue. At the same time, a weakening of the lira could intensify inflationary pressures further, as Turkey as an economy has a high amount of imports, and practically that would lead to higher consumer prices. So more or less, it seems like a negative spiral, which the Turkish lira seems unable to get out of. It was characteristic that the Central Bank of Turkey, in combination with the Turkish government, had announced some measures in the past which provided some support for the Turkish lira against the US dollar and the euro. However, that support has since evaporated, and the lira, especially against the US dollar, has reached very high levels once again. And the prospect is for the Turkish lira to weaken even further. Once again, though, a small note of caution here. We may see the Turkish Central Bank announcing new measures which may support the lira once again. However, such measures, should the monetary policy outlook not change, may prove to have only a temporary positive effect on the lira.
Any final comments, Peter?
Well, given the correction of the US dollar yesterday a little bit higher, I would like to see how the US session will open, whether the optimism in the US stock markets will be maintained. And I would be noting also the releases, especially the US releases, whether they're going to be affecting, especially the Philly Fed Business Index could affect the markets, to see whether that's going to be maintained also today. Overall, should the earnings reports once again outperform market expectations and analysts' expectations, we may see that happening, and we may see US stock markets gaining a little bit ground further.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Yossi.
So welcome to the technical analysis part. As usual, we make a start with the USD index. This is the 4-hour chart. I would like to show you the daily chart before we make any comments. Note how the drop of the US dollar over the past 3 sessions, that was on Friday, Monday, Tuesday, was stopped on Wednesday, and we tend to see that there was even a slight rise during today's European session. Let's drill back down to the 4-hour chart. Readjusting. So for the time being, we tend to maintain a bias for a sideways motion, given also that the downward trend line has been broken. I would expect the pair to remain within the spectrum between the 107.50 resistance line and the 105.55 support line. On the other hand, I would like to note also that there are some slight bullish tendencies here. We see that the US dollar has been rising yesterday and rises even a little bit today. But as long as the price action remains between the pre-mentioned levels, our bias for sideways movement is being maintained. Now, should the bulls take over, I would expect the price action to break initially the 107.50 resistance line, which would be signaling also a possible trend reversal from a sideways movement towards a bullish outlook. However, for a bullish outlook to be established, we would require the USD index to actively start aiming for the 109.50 resistance level. To the downside, and should the bears take over, I wouldn't be surprised to see the price action dropping, breaking the upward trend line, which has been guiding the pair. Let me show you it. See how there was an upward trend line practically since the 9th of February. And it intensified its upward slope since the 31st of May. This is more visible practically in the daily chart. Now let's drill back down to the 4-hour chart. We're adjusting. There you go. In such a case, I would expect practically the price action to break the pre-mentioned upward trend line, which has started to intensify on the beginning of May. Break definitely the 105.55, which used to be a resistance line, has now been turned into support line given that the price action has moved above it, and would also require clear breaking of the upward trend line, which has been guiding the pair since the beginning of February. For the time being, though, we tend to maintain a bias for a sideways movement between the 107.50 and the 105.55. I would like to note here that the RSI indicator has been on the rise, at the time reaching the level of 50. However, that could imply that the bulls may take over. So a sideways movement with some bullish tendencies should not take us by surprise. Let's have a look at Euro USD. Euro USD, which has also stabilized. Let's make the readjustments on the support and resistance levels first. Let's go hunting for a new support line. Daily chart, weekly chart, monthly. Drilling back down to the 4-hour chart, readjusting it, readjusting the levels. Let's readjust the labels as well. The resistance lines now. And let's make the necessary corrections. The final resistance line is being placed at 1.0485. The second resistance line is being placed at 1.0355. First resistance line, which used to be support, is now being converted once again back to resistance line would be the 1.0210. The first support line is being placed at 1.01. Parity level to be the second support line. And the final support line being placed at 0.9860. So for the time being, given that the price action has broken the upward trend line, which has been guiding the pair since the 14th of the month. Yep, that's the 14th of the month. And it was broken practically yesterday. We tend to switch our bullish outlook in favor of a sideways movement near the 1.0210. I wouldn't be surprised to see the price action revolving around it. On the other hand, we have to note here that the RSI indicator is dropping. It's actually aiming for the reading of 50. Should it break below it, we may see the price action following a similar move. Actually, the RSI would be following the price action, but still aiming for the 1.01. And should the bears take over, we may see the price action breaking the S1 1.01 and start aiming for the parity level once again. On the flip side, should the bulls take over once again, we may see the price action breaking the 1.0210 and start actively aiming for the 1.0355. Actually, in my opinion, that would be a prerequisite, the testing of the R2. That would be a prerequisite for a bullish outlook of the pair. Okay, let's have a look now at GBP/USD. GBP/USD for our chart. Once again, breaking the pre-mentioned upward trend line, following a sideways movement. However, here we have bearish tendencies which are more obvious. And we have to readjust the levels once again. No, that's a little bit too wide in my opinion. Let's narrow it down. Somewhere here. With this true here. Let's drill down to the 4-hour chart once again. Yeah. And then we have another one. Okay, let's keep this. I like it. We have a double touch here. But we have to note here that we have another double touch somewhere here. And this is the lowest point in the chart, so that's also quite valid. For the time being, I'm keeping this one. And that would be the 1.1510. Yep. Let's readjust it. We have now the S2 being placed at 1.1640. The S1, the first support line, which is being placed at 1.1815. The first resistance line, which is currently being tested, would be the 1.1935. Second resistance line being placed at 1.2070. And the final resistance line being placed at 1.2175. Lock them in. So for the time being, we see the price action testing the 1.1935 level. Seems to have been broken, however, it's not being clearly broken, so it's just testing it. We tend to maintain a bias for a sideways movement as long as the price action remains between the 1.2070 and the 1.1935. Should the price action move decisively lower, clearly breaking the 1.1935, not just testing it like now, but move lower substantially, placing some distance between the price action and the level, the R1, that would be a first signal for a possible bearish outlook for the pair. And I wouldn't be surprised to see it dropping, correcting a little bit higher, dropping once again, and starting to actively aim for the 1.1815. That could also allow us to draw a downward trend line here, which would be characterizing the pair's movement. In the case we see the bulls take over, that would require practically, bullish outlook, would require practically a reversal of the pair's movement, of cable's movement, a breaking of the 1.2070, and for the pair to start actively aiming the 1.2175. That will be a little bit improbable because we're talking about here about 140, 135 plus another 105, 240 pips, pretty much. On the other hand, though, the pair has shown in downward movement or upward movement that it could cover such a distance definitely within a day. Easy. For the time being, though, volatility remains rather low. Once again, bias for a sideways movement as long as the price action remains between the 1.2070 and the 1.1935. A bearish outlook should the price action clearly break the 1.1935 and start actively aiming for the 1.1815. And for a bullish outlook, we would require clear breaking of the 1.2070 and for the price action to start aiming for the 1.2175. The RSI indicator is dropping, has just broken the reading of 50, yet remains pretty close. So I think within the next 8 to 12 hours, we should get a clearer picture on where the pair is heading to. Let's have a look at USD Jpy. USD Jpy, which has been on the rise. It's still a bit unconvincing though. But we could see an upward trend line being formed here. Let's have a look at it. Could be even more intense. Yep. Let's make the necessary corrections in the supports and resistance line, given that the pair has broken the 138.50 resistance line, which now turns to support. And we make a start with the final resistance line, which is the 143. Second resistance line being placed at 141.50. 140 being the first resistance line now. The former resistance line, 138.30, is now being turned into support line. 136.75 being the second support line. And the final support line being the 134.45. Now let's proceed with the technical analysis here. So we have three elements which are, in my opinion, rather crucial. The first element, which is very, very characteristic, is the upward motion of USD Jpy despite the wide stabilization which was observed around the last days of June, from the 20th up until the 30th of June. Even the first days of July could be added. And despite that, though, we can see that the price action has moved in a scaled manner and seems to be supported by an upward trend line. So that would be implying more or less a bullish outlook for USD Jpy. On the other hand, we have to note two elements here, once again, that the price action, despite rising and breaking above the 138.30, let me confirm this level. Yep, sorry people, that should be 138.50. My mistake. So despite the price action actually breaking once again the 138.50, actually fails to write higher highs. I would like to see the next peak being higher than this one, and the price action to actually aim for the 140 resistance line, because you have consecutive higher trough, you have higher peaks, but that seems to be interrupted here. Should the price action fail to rise above this level here, that would be around the 139.60. Sorry, that would be the 139.40. That would be an indication for a possible stabilization of the pair. And in such a case, we may see the price action revolving around the 138.50 level. On the other hand, though, we have to note that the RSI indicator has jumped from the reading of 50 aiming for higher grounds, possibly implying a slightly bullish scenario here. So should the bulls maintain control over the pair, we would expect USD Jpy to aim, if not breach, above the 140 resistance line, which would be practically a new record high. It's already at very high levels, and that may be giving the bulls some cold feet here. Should, on the other hand, the bears take over, would expect the price action to reverse direction, break definitely the 138.50 support line, break also the pre-mentioned upward trend line, and I would require nothing less than a breaking of the 136.75, or at least a testing of the 136.75 for a bearish outlook for USD and JPY. Yeah. Let's have a look now at USD CAD. USD CAD, which more or less remained rather stable, breaking the downward trend line, guiding it since the 14th of the month. Yet during today's European session, you can see that there are some slight bullish tendencies, which have pushed also the RSI indicator from the reading of 30 to the reading of 50. So should the bullish tendencies be maintained and expanded, as USD CAD could find more buying orders along its path, we may see the price action breaking the 1.2935 and start aiming for the 1.3075. On the flip side, should the bears regain control once again, we may see the price action reversing direction, breaking the 1.2835 and start actively aiming for the 1.2720. For the time being, as long as the price action remains between the 1.2835 and the 1.2935, support here and support here, we tend to maintain a bias for sideways movement for USD CAD. USD CAD, which could also be influenced fundamentally this time from the price of oil prices as well. AUD USD, can see practically this upward trend line which has been broken. It would be a very I would dare to say similar picture, however, in the reverse of USD CAD, as we have the Aussie gaining, stabilizing somewhat, and during today's European session weakening against the US dollar. It's characteristic how the price action has broken the upward trend line guiding the pair since the 14th of the month, and has also broken the 0.6875 support line, which was quite valid given that we had some aiming here, some support here, some testing. So also testing on the upside. However, now we will have to change this, and its role is being reversed from a support line to a resistance line, given that the price action has moved lower. Let's go hunting for a new ultimate support line. Daily chart, weekly chart. Okay. And let's drill down to the forward chart. Does not allow us to go back. Somewhere here. I would like to see this touch here. And it has a reverse touch on the upside, with the next support line being placed somewhere here. So we have a new support line being placed at 0.6610. Let's drill back down to the forward chart, readjust the levels. Let's correct the labels. The final resistance line now is being placed at 0.7070. Second resistance line is being placed at 0.6995. First resistance line is being placed at 0.6875. First support line being placed at 0.68. Second support line being placed at 0.6715. And the final support line being placed at 0.6610. Yep. Lock this in. So, for the time being, given that the upward trend line has been broken, and actually the price action has dropped even below the 0.6875 support line, now turned to resistance, I tend to switch my bullish outlook in favor of a sideways movement initially near the 0.6875. Should the bears take over, I wouldn't be surprised to see the price action aiming for 0.68 support line, if not even breach below it. While on the flip side, should the bulls take over, I would expect the price action to break the 0.6875 resistance line now and start actively aiming for 0.6995. Actually, that would be a prerequisite for a bullish outlook. Let's have a look now at Safe Haven CHF, or if you prefer, okay. See, there are some requests to have a look at Nasdaq's for chart. Yep. Nasdaq, which has been on the rise. It's a nice upward trend line. Okay. So we have a breaking of the 12,145. Let's go hunting for another resistance line. Okay. I would like to see this level. And the reason is because we have a double top here and an aiming here. So this should be pretty valid. Green, please. And that would be the 13,550 ultimate resistance line. Let's make the necessary adjustments here. Let's correct the labels. Give me a sec. So the ultimate support line for now is being placed at 11,340. The second support line being placed at 11,730. Let's make that. The first support line is the 12,145, given that it was broken to the upside. First resistance line, which is currently being tested, is the 12,445. Second resistance line being placed at 12,930. And final resistance line being placed at 13,550. So we maintain a clear upward trend line, which provides us with a bullish outlook for Nasdaq. Albeit we have to note here that the RSI indicator has reached the readings of above the reading of 70. So on the one hand, that tends to underscore the bullish outlook or the bullish sentiment, if you prefer, of the market. On the other hand, though, it may imply that the index has reached overbought levels and may be ripe for a correction lower. A correction which could be made at around the 12,445 lower, as it seems to be finding some considerable resistance here. And the pair would be practically, in this case, expected to hit the upward trend line and move upwards once again, breaking the 12,445 and start actively aiming for the 12,930. The American session opening should provide us with a clearer picture on where the index is heading to. Should the stabilization take place, we may see the price action respecting the 12,445, correcting lower, breaking the pre-mentioned upward trend line, yet also respecting the 12,145 support line. Should the pre-mentioned upward trend line be broken, And the price action also breaks the 12,145, actively aiming for the 11,730. That would be a signal for a bearish outlook. For the time being, though, once again, we maintain a bullish outlook for the index. Yet, we would like to also add a word of caution for a possible correction lower, given that the RSI indicator has reached above the reading of 70 and may imply that the index has reached overbought levels. At this point, I would like to have a look also at gold's price. Yeah. And we can see that there was a downward motion. Let's go hunting for a new support line. Let's go down to the daily chart. Okay, here we go. Daily. So we have some touches. Oh yeah, it's actually a pretty valid level once again. You can see the touches here. That was on the 7th of April, the 8th of April, and the 9th of April. So we had 3 consecutive touches. And that would be the, in green please, 1640, 41 for the touches to be valid. Let's drill down to the 4-hour chart. Second support line being placed at second resistance line being placed at 1715. Has broken the 1700 support line, which now turns to a resistance line. First support line is being placed at 1678. Second support line being placed at 1660. And the final support line being placed at 1641. Let's lock these in a little bit higher. So overall, we tend to maintain a bearish outlook for the precious metals price, given also that the RSI indicator has dropped from the reading of 50 and is now actually flirting with the reading of 30, also implying a rather bearish sentiment for the precious metal. Should the bears maintain control, we may see the price action breaking the 1678 and start actively aiming for the 1660. It's actually a nice period to buy gold, as we are talking about levels not seen for a number of months here. You can see that in August 2021, it's pretty low. It could definitely move lower, but see on the monthly basis how steep the drop is. Quite interesting. So that should sum it up for the day from all of us here at IronFX. Best wishes for solid trading.
Today we're going to learn about the role of central banks and the main functions that they perform. After the Bank of England's establishment in 1694, the UK government used to take out a loan and it acted as the government's banker and trustee, in particular when it involved raising money. As trustees, central banks often bought government bonds. The action is known as monetary financing, which is still used today. The most important responsibility of the central bank is the monopoly it has over the distribution of money. Having a monopoly over the supply of money means that a central bank cannot run out of money. Theoretically, a central bank can issue any amount of money it needs to meet its needs. Of course, an uncontrollable increase in the amount of money would lead to higher inflation, raising the cost of living and limiting any benefits of the economy. Because the central bank is able to issue an unlimited supply, it cannot really run out of liquidity. Another important role of a central bank is to act as the lender of last resort during periods of distress. Central banks should lend to banks which are solvent in order to avoid panic. This is unimportant as in general the main activities of commercial banks are to provide loans and obtain deposits from the public. As the money is lent out, banks only have a limited availability of cash to cover for deposit withdrawals. During the times of the Great Depression, when many withdrawal requests were made at the same time, the commercial bank did not always have the available funds to meet all withdrawals. Therefore, to avoid panicking depositors that they will not be able to get their money back, it borrowed from the central bank. That's why the central bank is known as the Bank of Banks. Stay tuned with us for a live webinar about trading strategy clinic with Desmond, and don't forget to visit the webinars page at IronFX website to subscribe to more webinars.
In today's session, what we're going to be doing is we're going to be doing our strategy clinic, right? So if you have questions on your trading strategy, which you'd like me to diagnose, right? Maybe you have a moving average crossover strategy, or you have a strategy on Fibonacci, Elliott wave, right? In today's session, you get to ask me all the different, you get to share with me, right, the trading strategy that I have, and I can give you my professional perspective on it. All right, guys. Now, before we begin, a quick disclaimer that everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. All right, so please do your own little due diligence before you guys trade. Okay. Now, let's begin. Let's begin today's session. All right, let's begin today's session. If you have any requests, right, let me know too. All right, just a quick introduction of myself. My name is Desmond Leong. I run the award-winning research firm Everest Fortune Group and also the Forex Army. So we are finalists for the best FX research and best equity research in 2019, 2020, and 2021. So we usually have a strong team of traders advising the banks, the brokers, the hedge funds on where the markets are heading. But we have a special partnership with IronFX where we are bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. All right. So yeah, in today's session, right, there are only two things that we want to do, right? The first one is diagnosing your trading strategy. So if you have a trading strategy you want me to look at, let me know, right? I'll do my best to look at it, right? And if otherwise, right, I will, while you guys are sharing your trading strategy with me, right, I'll also be looking at some trading setups that we can look at together, okay? Now, let's begin today's session. Okay. Moving on to the charts. Okay, so I'm going to disable my video first because when looking at charts, I'm not sure how the video is, but maybe you should be able to see more of the charts if I hide my video. All right. Okay, let's go. Now, remove some drawings. Now, let's begin today's session. So usually when I trade, right, I'll just be sharing with you guys the approach I take to trading, right? So I usually have a, I use TradingView, right? I use TradingView to do most of my analysis, right? And I have a watch list by the side over here, right? So the watch list, I have my analysis, I got futures, I got my crypto list, I got a market watch, right? So market watch is where I see most of my market watch is where I see most of my all the different, you notice there's all the different majors, right? There's a little bit of the main cryptos I'm looking at, right? In the indices, right? I got a pound, the euro, the Aussie crosses, I got a whole bunch of them by the side. Okay, so this is where I usually scroll through my the different instruments and I see if there are any trading opportunities there, right? So let's begin. All right, let's begin. So maybe for starters, right, I usually start the day by looking at something like maybe dollar CAD, right? So how I usually analyze the trades is I tend to take most of my trades on the 1-day chart and the 4-hour chart, right? Mainly on the 4-hour chart. But what I do is I actually go onto the 1-day chart to look at the higher time frame to see if I'm missing anything out, right? So as you can see, right, if I look at the 4-hour chart, this is telling me one picture, but I will go into the 1-day chart, right? And then I will zoom out and I'll have a better picture on what is, I have a better picture on what to expect because, you know, I got a higher time frame over here. Okay. Now, the important thing to take note of is that when you're trading, you don't need to, what's the word for it? You don't need to take every single trade that you're doing an analysis on. Sometimes when you're looking at a market and you know you're just looking at it over here and you realize that, man, there is really nothing nice to trade in this market. If there's nothing nice, it's perfectly fine. Move on to the next market. Okay. Now I can see a couple of new guys are streaming in, right? Like Sahid, right? Temitopi, right? Foibe, right? Guys, if you have requests, if you want me to look at any specific instrument, right? We got Kelvin tuning into, right? If you guys want me to look at any specific trading instrument, right? Or you like euro, dollar, gold, or Bitcoin, let me know, right? Or if you have a particular trading strategy that you like my opinion on, right? You can let me know too, right? And I can share with you my opinion on these trading strategies, right? I've diagnosed many trading strategies in the past, right? I've created many profitable trading strategies. So if you want my opinion on them, now's the best time. Okay. So all right. So like when I'm looking at something like dollar CAD, right? I noticed that there's a lot of fluctuations, right? A lot of fluctuations in between here. In between that, I realized there's not really many trading opportunities for me over here. Right. At most, I do notice that there might be a little bit of a channel, but price is mainly in the middle of nowhere. Very few clear trading opportunities for me to trade. Right. But the important thing is that I notice if there is no opportunity, you just move to the next one. Now, this is one where there might be opportunity. Okay. So what I like about this, right? So if you're looking at a 4-hour chart, right, you might be looking at it and thinking that, oh man, right? Hey, Natalia, right? Nice to see you tune in, right? I'm not sure if you got your VIP room access already. But if you haven't, let me know, right? I think there was some registration problem previously, but it should be working now, right? But yeah, so if you're looking at a smaller time and looking at a 4-hour chart, you're just looking at prices go down, and you think that, oh man, it looks like price has broken a key level of support over here. You're expecting it to kind of go down further, right? So, okay, that's nice, Natalia, right? The VIP room will be a lot more active soon, maybe from next week onwards, because we are just finalizing the last bit of the nitty-gritty stuff, right, on getting it set up. Yeah, but it should be much more active from next week onwards. Now, so the thing with when you're analyzing a chart, okay, guys. So I see a couple of new people streaming in, right? In today's strategy clinic, I'm just going to share with you guys real quick. In today's strategy clinic, we are basically diagnosing your strategy and looking at trade setups. So if you have okay, I can see some questions coming through. All right, if you have a specific kind of trading strategy you'd like me to take a look at, just send it through. I'll do my best to look at it. Okay. Sahid is asking, what's the requirement for the VIP room? The requirement for the VIP room, right, is if I'm not wrong now, they just raised the bar. So as long as you have a $250 live account with IronFX, you can get access to it, right? So you need to go to vip.ironfx.com, right? So this is the link that I'm going to send to you, vip.ironfx.com. Once you go there, you can register for a new account, right? And then you get access to this VIP room over here, right? I think where's Natalia, right? But yeah, come in here, you have access to all the different instruments by the side. And this is where, you can come in here and you can practice your analysis, right? So like over here, you might be thinking, you come down here and enjoy this support line and you can say, hey, Desmond, do you think price might bounce from this support? What support level are you referring to? You highlight the text, click this button, link object to text, and you can select the object that you just drew, right? So what happens when you send a message through is that you can see over here, when I read your message, I can hover my mouse over it and I can see, oh, this was a support line that you're referring to, right? So that gives me better context to what you're doing. It's a great place where you can practice your trend line, you can practice your stochastic, you can practice your channels, your support, your Fibonacci, your harmonics. You can practice anything, and anytime you want me to take a look at something, you just mention me, right? Or you can mention the other group of prop traders that we have, and we can attend to your question right away. Okay, so all you need to do, of course, you go to vip.ironfx.com, register a new account, and if you have at least $250 in your account, right, all you need to do is to click on this thing called request access, right, and upload proof of your live IronFX account to get full access. So you just need to take a screenshot of your live account with $250 inside, and I will approve it, right? So yeah, you just need to click on this button here, request access. Okay, I think we don't have just let me check. Yeah, so we have actually 2 request access. So like Natalia over here, right? Like to gain access to the VIP room, and she has attached the proof of account size, right? I'm not going to view the whole thing, right? I can see it's over there, right? So it's enough. I will click accept, right? So I'm going to give Natalia a silver tier, right? Done. Natalia, you should have access to all the different channels by the side. I can see this guy, Carlitos, can I have access? He also wants access to it. I can see maybe he has a little bit of, he sent me a screenshot. Maybe there's an error of the screenshot, right? But I'll go check it with him later. But in this case, we give him the silver tier access and he will have access to the rest of the trading room, okay? So take advantage of this opportunity and join the VIP room, right? Because it used to be free, but IronFX have just changed the deposit requirement to $250. They might be increasing it over time. So if you have an IronFX account, please just go and what's the word for it? Register for it. Okay, I think go get your spot. Once you have registered for it, though, you can actually drop me an email, delong@notesco.com. I think this is the email. I'll check the email later, but you can just drop me an email, drop me a message, and I will ensure that your approval is expedited. Okay. A couple of new people coming in. That's great. All right. Temi Topi is asking, wouldn't mind some explanation on FVG and order block. Okay, I understand the meaning of order block, but what do you mean by FVG? What is there a short form for something? Yeah, maybe if you let me know, I can dig a little bit deeper into it. Okay. Now let me explain order block in a minute. Okay, guys. So the thing when you're analyzing a chart, right? When you're analyzing a chart, you need to take note that when you're looking at just at a 4-hour time frame, or are you looking at any time frame, a good habit to do is just to go one time frame higher. Go one time frame higher. So I'm at the 4 hours now. I'm going to the 1 day. Once I go to the 1 day, right? Then I might be thinking, okay, I'm expecting prices to drop further from here, or fair value gap. Well, I'm expecting prices to drop further from here. However, if you scroll further back, you'll notice that there is a major support level right over here, right? Major support level over here, right? Price had bounced from this level 1 time previously, 2 times previously. So it's close enough to that level where, we could be expecting prices to kind of bounce up from there. Okay. So this is the important thing with, on why it's important to look at a higher time frame, because we might have been thinking that we're going to just wait for prices to drop down on dollar franc. But if you look at the higher time frame, then you realize that, whoa, there is a major support level that goes back to even, the last time price was at this level was at July 2020. So it's about 2 years ago, right? So last time price actually tested this level was 2 years ago. So it's a very, very strong level. It might be dangerous for us to try to play the move beyond this level. So instead of trying to go short, so if I was on the 4-hour chart, I was thinking, price maybe breaks this level, I expect it to go down, right? But then you suddenly realize that it's a little bit hard for you to play the drop all the way down, because there's such a strong support level over here that it will make more sense to play the bounce from here. Okay, so yeah, this is one of the considerations that when you're trading, don't just look at one time frame. Look at the time frame which you're going to take your trade on, and then go one time frame higher and see if you happen to miss out any of these trades, right? Do you miss out like a super big support level that goes all the way back for the past 10 years, right? Or something like that. Okay. Now, guys, let's move on from here. Just give me a second. Okay. Okay. Let's move on from here. Just anyway, regarding this particular analysis on dollar franc, right? Because I do want to explain it a little bit more. Before I move on to the next pair, right? This analysis, after I highlight my key support and resistance levels. Okay, so in this case, I have a key support level here. I then would do this thing called a Fibonacci projection. Right, this Fibonacci projection, I use 61, 78, and 100. So what you always tend to notice is that the 100% Fibonacci projection is pretty handy. Even the 78 was great. You notice how price touched the 78 and then bounce up a bit, bounce up, bounce up. Price touched the 100, it bounce up, touched the 100, it bounce up. So these are what we call Fibonacci projection levels. If you know how to use them accurately, they are very, very effective in being able to call little reversals. They are one of the only, right? They are one of the only leading indicators out there. So in trading, sometimes we have lagging indicators, sometimes we have leading indicators. So what are lagging indicators? Lagging indicators, right? Lagging indicators are stuff like your moving average, right? Your moving average is usually a lagging indicator. Your stochastic is a lagging indicator. Your RSI is a lagging indicator. Even Bollinger Bands are lagging indicators. Many of these are lagging indicators, right? That means they require price to move first. Only when price moves, then it moves along, right? So this is what I mean by lagging indicators. So they are usually one step behind the market, right? Moving averages are one step behind the market because you require the market to move first, right? You require the market to move first before you move. So then again, it leads to the next question. What are leading indicators? Leading indicators are things that forecast, what's the word for it? They get to forecast price in advance before it even happens, right? So for example, in this case, a leading indicator like Fibonacci, what it does is that it forecasts at 100% projections over here. So it's forecasting that price will come down, touch the 100% and make a small bounce, right? So we can see, when it comes down, it touches the 100% and that's a small little bounce from here. Okay, you can see that it touches, then it bounces, right? So that is what a leading indicator does. In trading, it is important that you have a combination. You have a combination of lagging indicators and leading indicators, and so there are three kinds, right? There is I told you there's lagging, there is leading, and then there is right in the middle. Right in the middle is what you call price action. Price action, meaning this is when in the thick of the action, when things are happening. This is things in the past, these are things in the future. Okay, so in this example, right? So if I were to give you an example, lagging indicator could be a moving average, right? So maybe you have a moving average that is like support over here, right? You have a long moving average that is like support. So this is one reason why it might bounce. Okay, then you have a leading indicator. A leading indicator like a Fibonacci projection, right? It projects that this 100% might be a level where price might bounce off. So we got lagging and we got leading. What about price action? Price action is maybe when price just touches this level. You look at this. We have this kind of different kind of price actions. I know it's a little bit hard to see. That's why I'm going to come in here. I'm going to remove all my brushes, right? So maybe when you reach over here, right? What you then notice is that there's this price action over here. There's a bullish engulfing candle over here, right? There's a long wick rejection over here, right? So these are things that it forms the third part of the puzzle, right? You got lagging, you got leading, and you got the past. Basically, the past, the present, and the future. When you combine all of it, all three of it together, you get a very high probability trading setups. But you must combine the right things. All right. So in this case, Fibonacci's are a leading indicator. It forecasts 100% over here, right? At the same time, we got support and resistance. You can see a very nice support in the past over here. And then, of course, we have let's see. I think that is most of the that's most of the reasons why we think price is going to go up. I think there's a short-term channel breakout. There might have been a short-term channel breakout somewhere about here. Right, you can see price was going lower. Price was going, you can see price was going lower in this channel and finally broke out from there. So you now have a couple of reasons, right? You have 100% Fibonacci projection. You got a nice channel breakout. You got, you got one here. We got two here. We got a nice support level over here, right? Three reasons why price might bounce up, right? And we throw an indicator, maybe look at the stochastic. Stochastic, I like to use 21, is it a 5-3? Or is it 34.53? There's some numbers that work better than the others, right? Stochastic, nice bit of stochastic that is turning upwards, right? We can see stochastic slowly going upwards. So there's a lot of upside potential, right? So this then shows me that how I got 1, 2, 3, and maybe 4 reasons why price might go up, right? If you look at it, there is bullish divergence. Stochastic is making lower highs, right? Price is making, right, lower lows, and lower lows, right? So there's bullish divergence here. Right. So now you got 1, 2, 3, 4, 5 reasons why price is going to go up. So when it comes to trading, this is the This is basically all there is to it, right? You need to try to find more reasons why price is going in the direction that you expect it to go than the reasons against it, right? So in this example, I have so many reasons why price might be bouncing up, right? I got a nice 100% Fibonacci projection. I got a nice channel breakout over here, right? I got a nice super long support that goes back for the past 2 years. I got stochastic that is bouncing upwards, and I got a bullish divergence that is that's showing that price is going, is likely going to make a bounce. So when you combine all of this together, this is what we call a high probability setup, HPS, right? A high probability setup. You are combining this is a leading indicator. This is chart patterns. This is these are called indicators, right? We're combining divergence. We're combining support and resistance, right? And we're combining an oscillator. So you combine all the different kinds of studies, right? Just to give yourself the highest chance of being correct, right? So the reason why we combine different studies is that we cannot be biased. Right? What I mean by that is that sometimes a mistake that most people tend to do, right, is that they load too many indicators that belong from the same family. Now, what do I mean by that? Right? So they might load an indicator like the stochastic, they load the RSI, they load the MACD. Did I load the MACD? MACD, right? Now, so these are all oscillators, right? And then you look at it and you say that, all right, RSI looks like it's going upwards, right? MACD looks like it's going upwards, it's going to cross, right? So all of these are essentially oscillators. So they are telling you the same story, right? So this one says yes, this one says yes, this one says yes, it's going upwards. If you are not careful, you will have, you will treat this as 3 separate ticks, right? You will treat it as 3 separate ticks, and then you'll be very confident. But the danger is that the RSI might be just telling the same story of the stochastic. The MACD might be telling the same story as the RSI and the stochastic. So they're all actually telling you the same thing, right? But just from just different forms of oscillators. So one tip that I have is that if you find yourself doing this, please don't do it, right? Try to combine different studies of analysis, right? So if you have one oscillator, that is enough. Having one oscillator most of the time is enough. Then you look at support and resistance levels. Then you look at trend lines and channels, right? Then you look at Fibonacci. Then you look at Ichimoku, right? After you look at Ichimoku, then you look at maybe divergence, right? So you combine different things to really give yourself the best chance of being profitable on a trade. Now, Temitope, fair value gap, I roughly understand what fair value gap is. I will need to dig a little bit more into it, right? I roughly understand it's more something similar to demand and supply zones, like price tends to reverse. Price tends to reverse to fill up the fair value gap or something, right? I'll need to do a little bit more research into that to give you a proper answer. But I believe it based on what my initial understanding of it, yeah, fair value gaps is basically like a different version of supply and demand, right? So there is a lot of there are reasons why it will work. Okay, I will, however, now move on to the next part, right? I will now move on to guys, right? Got a whole bunch of you guys here. If you want me to look at any instrument, let me know, right? So I will just pull it up and I'll just look at it. Okay, I'll do an analysis on it, and you can watch me analyze the chart and maybe look at find some trading opportunities. In this case, we're expecting dollar franc to go up. So if it goes up, that's great. Okay. Now let's look at other stuff, right? Okay, one of the instruments that I was watching is actually Kiwi Dollar. Okay, what do I like about Kiwi Dollar is that it is very strong bearish momentum. I think there might be a bit of a channel. Tweak it a bit. Bearish channel. So you firstly have a bearish channel on Aussie dollar. Okay. Okay, Sahid, I will, if there's a particular indicator that you want me to teach, let me know, right? Some of it are a little bit more advanced, some of it are a little bit more straightforward. But if there's a particular indicator which you want me to explain a little bit more on, let me know. Or otherwise, I will try my best to explain it along the way. All right. So this thing is called a channel, right? This thing is called a channel, right? And a bearish channel means that prices are going down, right? So bearish channel means that prices are going lower, 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 lower. You're expecting prices to kind of go down, okay? Bullish channels are the opposite, right? Bullish channels, you're expecting prices to go up. It's usually green in color, okay? Now, this bearish channel. So first thing we establish, number one reason, right, why price might go down is bearish channel, right? Bearish channel, I'm going to call it BC, bearish channel. The second reason, throw up Ichimoku. So the Ichimoku, so I use the Ichimoku in a slightly different way, right? The Ichimoku Kinko Hyo is actually Japanese for charts at a glance, right? The original indicator is actually very, very complicated, right? You look at it, there's so many things there, right? So they have a lagging span, the Chico span, right? You got all this different stuff, but I feel that it's a little bit overwhelming. So what I like to do, one of the most effective tools of the Ichimoku is actually, once you disable everything, is the cloud. It's the Ichimoku cloud. You can see there's a nice little cloud over here. The cloud means something simple. If price is below the cloud, it means that there tends to be bearishness. If price is above the cloud, right? If price is above the cloud, you tend to see a little bit of bullishness. That means price tends to go up a little bit more. Now, this is not guaranteed, right? Rather, this is just one of the reasons. This is just one interpretation, right? So in this case, I got Ichimoku, I got bearish, right? The third reason is that now I'm looking at this and I see that there's a nice descending resistance line pushing prices down. And if I go down under the smaller time frame, there's also another, you can see that price is being squeezed down here, right? On what I like is on the smaller time frame, you notice that we're on the 4-hour chart now. On the 4-hour chart, price is below Ichimoku, right? On the 1-day chart, price is also below Ichimoku. So this works on both time frames, which is great for me, right? It means that they're both, we're seeing bearishness on the higher time frame and the lower time frame, right? Now, okay, I'm just going down the 4-hour chart now, and I'm seeing this over here. Oh, sorry. Let me come down to here. Let me just remove some of my drawings. Okay, so price is going down, is going down, is going down, is going down. How low can it go? Right? How low can it go? Right. So now the key thing is that if we see that there's so much bearishness, right? If we think that price is going to continue going lower, what do we do next? Right. The next key thing is to decide when would be the best time to sell. When would be the best time to sell? There is, however, one risk I notice over here is this little thing over here, is this little support line, right? This line is irritating because every time price comes down here, it bounces up. Comes down here, it bounces up. It comes down here, it bounces up. So this to me is a risk level, right? Price has bounced multiple times in the past on this level. So I would need prices, I'm afraid that price might bounce and continue to go up. So what I need to do is I need to use this as what we call a downside confirmation. Only when price breaks this level, right? If price breaks this level, then it might continue down further. Okay. If price breaks this level, then it will continue down further. So this is an important thing to note. You can find all the reasons why price might be bearish, right? Like a channel, bearish channel, bearish Ichimoku, bearish trend line, right? But you must wait. When it comes to trading, it's slightly different, right? Analysis is one thing, but once you have the analysis and you basically tell yourself, okay, man, Aussie dollar, AUD USD looks really bearish, right? That means it looks like there's a lot of downside momentum. Once you have the idea in place, then you look for your trading opportunities. You try to put that idea into action, right? To put the idea into action, you need to know what is your entry. In this case, we can see that because this is a key level of support, we need prices to break this level to trigger the move down, right? So in this example, right, price needs to break this level. I'm going to call this sell entry. So price needs to break this level, and only once it breaks this level, then you can expect it to go down lower, right? How low can it go, right? It really depends, right? If prices goes lower, it might continue to respect the channel, right? I think that the channel, channel could continue down much further, right? So it could go even all the way down to maybe the next key support could be about here. We don't need to play the move too far. You could easily just play the move down to here, right? And you keep a very tight stop loss, right? That will make you a good enough risk to reward trade. Okay, yeah. So this is one example of using a high time frame to filter out some trading opportunities. I will continue to scroll through the different charts, but now there's another thing called correlation. Right, so Australian dollar and Kiwi dollar, what do you notice? I'm just moving between the two now. They tend to be very similar. They tend to move together, right? When one goes down, the other goes down. When one goes up, the other goes up. Now, let me teach you now the concept of correlation, okay? Correlation, so I'm going to click this plus button, AUD/USD, okay? And I'm going to put it on the same pane, right? And I'm going to change this to a line chart. What do you notice, right? I'm going to hide this Ichimoku. You notice that these two instruments, these two AUD/USD and NZD/USD, they tend to go down, go up, and go down, and go up, and go down, go up, go down, go up, go down, go up. They tend to go down and go up together. This means that they are positively correlated. So when one goes down, the other goes down. When one goes up, the other goes up. So based on this same theory, right? Based on this same theory, when one has a breakout, the other should also have a breakout, right? So in this example over here, right? We expect prices, right? If price breaks this level, it should go down. If price breaks this level, Kiwi dollar has to break this level too, right? What do I mean by that? Right, is that this is the support level on Kiwi dollar. This level on Kiwi dollar is this level on Aussie dollar, right? If they both are broken at the same time, you get a very high chance that your breakout is going to be successful. But if they don't break out at the same time, one breaks out and the other one doesn't break out, then you know that there is something that is not, there's something that is wrong in the markets, right? That means there's a disturbance in the force, maybe. If that's what you call it, there's a disturbance in the force, right? It might be better for you to avoid that trade. So many times, I get questions asking, how do you avoid getting faked out of a trade, right? As in, like, how do you avoid false breakouts? A lot of us love to trade breakouts, but many times when we think that, imagine we're over here, and we think that, okay, price has broken out. The moment price breaks out, we try to play the move down. But price then comes back up, and then it stops us, it hits our stop loss. How do we avoid this happening, right? Because it's the more it happens, the more money we lose, which is not very nice, right? So one of the ways they can use to really avoid this from happening is what I call the correlation filter. Okay, so in this example, right, if this is the support level, then this will be broken. Once price has broken out from here, I would then look at our good friend Aussie dollar. If Aussie dollar, which we expect to break out from here, if it instead bounces up, right, so one is going up, in this case one is going up, but one is going down, that means there's something wrong, right? That means this is likely going to be one of them is right. Basically, one of them is right, one of them is wrong, right? It's a false breakout. We would avoid trading this because we have a lower probability of succeeding, right? We have a lower probability of succeeding because the markets are not moving in tandem with each other. However, if Kiwi dollar breaks out and then I go to Aussie dollar and it also happens to be breaking out like a bearish breakout, and then I know that the market is singing from the same hymn book, right? Both of them are moving in tandem, both are moving together, and that means that I have a higher probability chance of being correct. Okay, I hope that this concept of correlation helps you understand how to avoid getting caught in false breakouts. I do want to encourage you guys that if you have questions, right, you want me to look at a certain currency pair, you want me to look at a certain instrument, right, or you have a certain style of trading which you want me to give my feedback on, please just send it in the chat section and I'll do my best to look at them. Okay, otherwise, yeah, you know, we're just going to continue to scroll through. Oh man, this trade worked out so great, right? Yeah, this trade worked out so great. How I got into this trade, right? Let me see if I have an example on when I made this. I made the call of this trade live. Let me see over here. And I'm going to explain to you how I got it. And so maybe it gives you an idea, right? So this was made by me on the 28th of June, right? So I did an analysis on the 28th of June. I'm going to mute this. And the idea with the analysis is that on the 28th of June, we are calling for price to drop from here down to this take profit level. Look at the risk to reward. The risk to reward is like 1:1, 2, 3, 4, 5 or something. It's a great risk to reward setup. Okay. Now, how did I make this? How did I make this trade? Right. Clearly, we can see that the trade has worked out very nicely. Drop and is about at our take profit. Right. But how did I make this trade? Let me show you. When I was looking at this strategy, right, I'm going to do a bar replay. I think the market was about here. Okay. One thing I noticed, right? One thing I noticed is that I scroll back and I noticed that prices was dropping, you know, lower and lower and lower and lower and lower. It was dropping lower and lower, right? So in this example, right, there is a very strong bearish. There's a lot of bearishness that's pushing prices down. Okay. At the same time, I was scrolling back and looking for support, right? It is clear to me that there is a very nice little support over here, right? Price bounce off it once, right? You can see price bounce off it once, and then it bounce off it again, right? So in terms of my take profit, if you notice, I don't play my take profit further than this level, right? The reason for that is because with such a strong key support level over here, it will be foolish for me to try to play my take profit all the way down, because price, this is clearly a big level of support. It is unlikely that price is able to break this and go all the way down. That's why we only play it to the highest degree of certainty, right? In this case, I'm very certain that price might go down to there, but you ask me whether I'm very confident that price will break out from there and go even lower. I can tell you that I'm not confident of that, which is why we need to play it safe, right? So in this example, I played down here. Now, how did I get this trade then, right? What I did was, when I look at the chart, I threw up my Ichimoku, right? I noticed that price has been respecting Ichimoku very nicely, right? You can see it takes, it go down, below it go down, it test it go down, it test it go down, test it go down, go down, it test it go down. Now it's over here again, it's testing it. So you will tend to notice that there's this certain pattern in Ichimoku. If you notice that the recent price movements have obeyed Ichimoku very well, like it has been testing it and it has been behaving well based on Ichimoku, then you can use Ichimoku. When is a bad time to use Ichimoku? Rather, a bad time to use Ichimoku is when prices are ranging. Right, so maybe give me an example when it's ranging, like here. This is when it is ranging, and it's a terrible time to use Ichimoku, right? It goes up, goes below, it goes above, it goes below, it goes above, it goes back above, right? It goes back below, it goes back above, it goes back below. So in this example, right, Ichimoku is not that great, right? Ichimoku has a lot of what's the word for it? There's just way too much noise, and you want to stay away from Ichimoku. You want to stick to Ichimoku in moments like this, right, where there's a clear trend, right, to trade using Ichimoku. Okay. So anyway, back to the latest drawing that we have over here. How did we manage to call euro dollar? How do you manage to call this drop on euro dollar so perfectly, right? Quite simply put, after I've established that Ichimoku is pushing prices down, I then look at chart patterns, right? One of my favorite chart patterns is the channel, right? So notice that the channel is also suggesting that prices will continue to drop more, right? Because it has been reversing, and it's testing this level over here. So I got the channel, I got the Ichimoku. Two reasons why price might be dropping, might continue dropping. And then I look at the resistance level. We have a very nice overlap resistance over here, right? Overlap resistance, you look at the past webinars we did for IronFX, it will explain to you what is this overlap resistance. It's a very good way to find reversals. Okay, overlap resistance is my third point why price might be dropping nicely. Okay, so these 3 points add up together, we figured price might drop. But how far can it drop? You know, how far can it drop, right? In our example over here, you can see that we only call it to the recent swing low. So in trading, you know, it's important for you to know exactly where is your take profit. There must, you know, a lot of people tend to focus just on the entry, right? A lot of people focus on getting this entry. Once they get the entry, they randomly put a take profit, they randomly put a stop loss, right? Which is a shame, right? Because the take profit and stop loss levels are as important as the entry. Let me repeat that again. Your take profit and your stop loss levels are as important as your entry. Okay, so in this case, once you establish the entry, you need to spend an equal amount of time to decide where your take profit is going to be, right? Don't just throw your take profit to any random level. So a lot of what's the word for that? A lot of forums out there, maybe on Baby Pips or these Instagram traders, they just give you a very simple trading strategy. They say that, okay, when you see a trading pattern, give yourself 50 pips stop loss and 50 pips take profit. Okay, let's see what will happen if we did something like that. Okay, I'm going to remove this. Oh, not 50. Let's do like 500 or something. So we have a short order over here. So bam, this is your trade, you know, and you put your take profit. Let's just say you put your take profit at 500. No, at 300. So you notice your take profit is, you look carefully, right? There's this number 307.4, right? 307.4 is 300 pips of profit. So sometimes when you look these trading educators out there, right, they say just put your take profit at 300 pips or something, right? So the problem with that is that if you were to put your take profit at 300 pips, your take profit will be down here. Okay. However, there's a key support level over here. Right? I'm going to put this as a support, which is green color, right? And this is your take profit. Let's not worry about our stop loss first, okay? Let's not worry about our stop loss. Let's look at take profit, okay? What happens is that price then drops down to here. And when it drops down to here, it touches this level and then it bounces up. That's the problem with having a take profit that is beyond a key level, right? Most of the time, it might cause you to miss your take profit. There's a rule that I want to say. Take profit is, you know what, I'm just going to write it out instead. Take profit before key level. Stop loss beyond key level. This is an important point that you guys need to know. I'm going to make it so big so that you guys can see it, right? Put your take profit before a key level and put your stop loss beyond a key level. That will give you that will instantly improve the hit rate of your trades, because in many situations like this, right, if you randomly put your take profit at 300 pips, like down here, what happens is that price will go down, price will go down, price will go down. Okay, and when price goes down and it touches this key support level, it bounces up. It bounces up, and then you're wondering, oh man, is the market being is the market being manipulated? Right? You're wondering, man, why did price bounce up from here? You know, is the market being manipulated? You know, why? You know, how can it just avoid my take profit and just it just goes against my trade, and maybe goes all the way to stop you out, right? The reason is because of your take profit placement. There's a better way to put your take profit, and that is putting your take profit before any key level. Okay. The opposite is true, right? That means your stop loss should be beyond a key level, right? You should always put your stop loss beyond a key level to give it that bit of breathing space, right? Just so that you don't get stopped up when price goes to your key level. Okay. Important considerations. Now, we do still have a little bit more time, guys. I see quite a number of additional guys streaming in here in our trading strategy clinic. I'm open to taking your questions, right? So if you have a particular trading style or trading strategy that you want me to take a look at, or you want to share and I can give you my feedback on, let me know and I'll do my best to look at them. And also, if you have a instrument that you want me to look at, maybe euro dollar, pound dollar, or gold or Bitcoin, if there's a particular instrument you want me to take a look at, let me know too, and I'll do my best to get to it. All right. Now, okay, so this is on euro dollar. Let's see some of the other instruments around, right? Which one has, so when I'm looking at stuff like that, right? If I'm looking at stuff like on the 1-day chart and I see this, I know that there's almost nothing I can do to trade. It's so hard to trade this, right? Just price is just going up and up and up. So I tend to avoid it. Pound dollar, I like to zoom out, see if there's any key level which I'm missing. Not really, nothing nice on pound dollar. Swiss franc, nothing much too. All right. So I would then scroll through the different charts, right? And I see if there's anything I'm missing, right? Interesting here. Interesting. Still waiting on a couple of key levels to be broken. This one maybe. Pound franc might have a trading opportunity. I'll be sharing with you guys in a bit what I think might happen with pound franc. Pound franc has idea. Okay, so this is really honestly what I do every day. I just scroll through the charts and I see if there's anything that jumps out at me right away. I go in, I go out, I just zoom in and zoom out, look at the key levels, and all right, maybe we have, oh man, this trade worked out so nicely. Okay. We got EuroCAD. Oh, EuroCAD looks interesting. Is there another big level it might drop to? Okay. So this is the thing I noticed about EuroCAD, right? It's another nice trading opportunity I'm seeing. Nice bit of bearish Ichimoku cloud that is holding prices down. So we have one reason why prices might go down. I like this little bit of a, price is going down, 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 down. It's going lower and lower and lower, right? It's a very, very good sign for me that, price is in a nice descending trend. The important thing that I need to do now is I need to look for a breakout. I can see that price broke one, bounce one, bounce twice, bounce 3 times. It might be bouncing a 4th time over here. But this is my key trigger level, right? This is my trigger level. I put it over here. Because if price is able to close below this level, I am pretty sure, right? I'm pretty sure we're going for a free fall, right? So this is my sell entry. If price is able to close below this level, we might go into a free fall. Where would it free fall to? This is where I will zoom out, zoom, 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 right? And I realized that, whoa, the only level it might free fall to next is probably over here. This is the next big free fall level, which if you look at it, man, it's a very, very good juicy trade if it works out nicely, right? So of course, in this example, our first need for prices to break below this level. Once it breaks, it should trigger a drop. It should trigger a big free fall all the way to this level. And this was the big level since April 2015. You know, one big bounce. Price hasn't came back since, but this is clearly the big support level to watch out for. Okay. Now, I hope you guys found this session useful. I hope you guys found this session useful. If you have not joined the VIP room, please head over to IronFX, vip.ironfx.com, right? Register for a free account over there. As long as you have $250 in your IronFX account, right, you can send a screenshot over to me, right? You just need to click request access and send a screenshot over. If you have $250 in your IronFX account, you will get access to the VIP room where you can ask me questions. You can trade alongside me. You know, you can ask me, you can see the trading ideas, the trading signals that we're going to put inside here, right? Many high probability setups that you can look at. And you can take your trading to the next level. But first, you need an IronFX account with a minimum of $250 in it to get access to this. Okay, guys? If no one else has any questions, right? Thank you so much for staying with me throughout this entire webinar, right? Nice to see you back here, Natalia, right? Hope to see you in the VIP room. It's going to get a lot more active, right? Once we roll it out to out of this beta testing phase, right? It's going to be a lot more active, and there's going to be a lot more trading ideas that are being shared in there. Okay, I hope to see you in the VIP room. Thank you, Sahid. Yes, please, if you can, head over to the VIP room and you can practice your analysis there with me, right? We've got a strong team of prop traders, professional traders, you know, trade for a living, right? And of course, you know, you get access to the My Trading Ideas too. Okay. Thank you very much, Natalia. Thank you, Sahid. You know, thank you, the rest of you guys. We've got Javed, you know, Simon, Merritt, Kelvin, right? Thank you, guys. Hope to see you around the VIP room. Take care. Stay safe. Trade safe, and peace out, guys. Take care, everyone. Bye-bye.
Hello everyone, my name is Emily and today we are going to talk about the affiliation program. So what is an affiliate program? To simply put it, an affiliate program is an agreement in which a business pays another business or individual a commission for driving traffic or sales their way. Within the world of forex trading, this involves a forex broker and a forex affiliate, with the affiliate referring clients to the broker. So how does this work? Firstly, you register as an affiliate with IronFX. Then you share your referral link with your network on your website or your blog. Then you get your client to click on the link, register with IronFX and start trading. And then last but not least, you receive a commission. Now the question is how to join our affiliate program. The first step is to register as an affiliate in the IronFX portal. Then you have to log in to your affiliate portal and get access to a wide range of marketing material. Then you get your referral link and use the promotional material on your website or other. And last step is you start earning commissions through one of the most popular forex affiliate programs for each client you refer to IronFX. Thank you so much for joining us today, guys. See you tomorrow. Bye-bye.